Talk about the close. We've also had the open. U.S. IPO activity picked up in 2024 by about 30%. Just 10 out of the 150 IPOs were tech companies. Compare that with 112 in 2021. That was the bumper year. So what happens this year, especially now that we've learned from DeepSeek that AI startups maybe don't need billions of dollars worth of chips to train their models? Joining us is Scott Raney, managing director of Redpoint Ventures. They just launched their fifth Omega Early Growth Fund, raising $740 million. Scott, a little tight on time here with all the developments in Washington today. And we have an IPO next week, don't we? But again, I don't think it's a tech company.
It has been a slow market. We actually only saw 5 enterprise software-based IPOs last year, although one of them, ServiceTitan, performed extraordinarily well. I think there's demand in the market for these high-growth companies, particularly those that can be impacted by AI. But one of the things I think a lot of companies are considering, especially those that have the potential to go public, is what's the virtue of being public in this environment? The reality is these companies have plenty of access to cash in the private markets to provide liquidity to their investors and to their employees. And given everything that's going on, given how dynamic the environment is right now, the opportunity to be private longer, I think some people regard as a positive.
Yeah, the CEO of Raymond James, outgoing, made this very point on the show yesterday, said more and more companies, because, this obviously they have a vested interest in this, more and more companies, he said, see private equity as an easier route.
Yeah, it's not only that. It's like if you think about the Databricks and what they've been able to do as a private company over the past year, how aggressive they've been able to move into AI through a series of acquisitions, which might have been difficult to do as a public company. I think some people can regard it as a competitive advantage at this point to be private.
Yeah, you're out of the spotlight. You're allowed to do M&A. You don't have people looking over your... I hate this. How do we change this? It's impossible to, even if it's a deregulatory administration, we're talking about changes that go all the way back 20-some years, and we're at an effort to crack down on fraud.
There's not an easy answer, unfortunately. And I think given how dynamic this market is, given the impact that AI is having, and just look at the news of the past 2 weeks, just how fluid everything has been. I think that you're gonna see more companies choosing not to go public.
Scott, in the remaining seconds we have, and this has been, you've packed a lot into a short period of time, a couple of names you've invested in that you're excited about. Can you tell us about them?
We have a series of companies. I think we've been very active in the AI space more recently. We've been focused a lot on the applications. I know there's been a lot of discussion this week about the how good something like DeepSeek can be in terms of catalyzing AI app development. We've got companies like Abridge that are transforming the healthcare space, Leia in the legal space, and Trunk Tools, for instance, in the construction space, that are basically taking a bunch of manual tasks and turning them into software. And I think the implications are going to be very meaningful. What's really compelling is just how profound these value propositions are.
Yeah.
These companies are growing faster than ever because the value that they're able to bring to the table is so compelling.
No, I appreciate a glimpse into it, and maybe we'll learn more. And it's a home builder next week debuting, sign of the times. Scott, thanks for joining us. I hope to check back in soon.